All three major indices notched all-time highs in February, with the Nasdaq and S&P 500 scoring their best month since 2021. How long can the powerful upward move continue? Well, that action starts now. Stocks ripped higher again in February on the backs of a handful of mega cap tech stocks. For the month of February, the S&P 500 advanced 5.2%, the Dow Jones Industrials finished 2.1% higher, and the Nasdaq Composite also gained a whopping 6.1%. Once again, stocks continue to rally on strong economic data, earnings beats, and some powerful mega cap stocks. This month alone, Nvidia was up 30%, Meta was up 26%, and Amazon was up 13%. Investors continue to shrug off concerns over the highest interest rates in 2 decades. Bond yields all spiked higher for the month. The 5-year closed at 4.26%, the 10-year at 4.25%, and the 30-year at 4.38%. As of this writing, the 10-year yield is trying to break out, but hasn't just yet. If it does, that will be a new headwind for stocks. March WTI crude rose steadily all month and closed out at $78.26 a barrel. Concerns about future OPEC Plus policy weighed on the oil market. However, the state of the term structure of the oil future markets continue to point to a tight physical market. On the charts, there has been a clear loss of momentum, but the upside target of $82 to $83 a barrel, based on the magnitude of the recent pullback in prices, remains in focus. As far as downside risks go, easing geopolitical tensions in the Middle East and Eastern Europe could both instantly remove several dollars worth of risk premium from global oil future benchmarks. March high-grade copper initially dipped lower before reversing course to close slightly lower for the month at $3.90 an ounce. $3.95 is still the key level to beat for copper and economic bulls. Much like copper, gold also fell at the beginning of the month before reversing course. It too closed slightly lower at $2,045.70 an ounce. The outlook for gold remains positive, but the market is, for now, still trendless in the mid-2000s. The dollar spiked higher right out of the gate and then stabilized for the remainder of the month to close out at 104.09. Until the data or central bank speak changes expectations for the Fed, ECB, or BOE, currency markets will remain calm. With the dollar in the mid to low 100s, it's neutral for stocks. And while it's not going to fuel a continued rally, it's not going to weigh on earnings either. The January core PCE price index rose 0.4% month over month and 2.8% year over year and met expectations. The most important part of core PCE was the fact that inflation continued to decline year over year to 2.8% from 2.9%. That's a minimal reduction, but considering the bounce back in CPI, PPI, and other inflation metrics, that was a mild relief, and that's why stocks rallied. The core PCE price index wasn't bad enough to cause a pullback, but beyond the short term, this is not something that will make the Fed more confident that inflation is moving quickly to 2%, and as such, it won't pull forward rate cut expectations. The logic remains consistent. If the rally continues, it'll likely also continue to broaden and benefit other sectors outside of tech. However, if something legitimately bad does happen, these strategies with some sort of hedge should relatively outperform the S&P 500 and be able to help investors keep more of the substantial gains. For the month of March, our models continue to hold a 50% allocation in the money market due to the current economic environment and overbought position of the market itself. Our broad focus remains on domestic equities and international equities. Our focus in domestic equities is on large cap growth, large cap blend, and mid cap blend with an emphasis on technology, industrial, consumer cyclical, and financials. In international equities, our focus is still on Europe emerging, Latin America, and Europe developed. As a reminder, my current allocation is not a recommendation. Regardless of what happens next, investors like you need to have a simple and yet solid financial plan that reduces risks, costs, and taxes while securing the necessary income you need to maintain your lifestyle throughout retirement. If you don't have a plan or you're not comfortable with the plan you currently have, call me today to get pointed in the right direction. I'm Chad Kuntz, and that puts a wrap on the March 2024 Market Action Report. Thanks for joining me. It's time for me to get back to the markets, and that action starts now.